The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. It looks like investors are holding short bets on most Asian currencies, and that's as they remain cautious about prospects of an escalating global trade war after U.S. President Donald Trump's tariffs on major trading partners. In fact, according to a recent Reuters poll, bearish positions on the Malaysian ringgit, the South Korean won, Taiwan dollar, and the Indonesian rupiah firmed slightly, while those on the Thai baht also ramped up. So what are the potential implications of Trump tariffs on Asian currencies? Which currency could come out as the biggest winner and which the biggest loser? Well, to find out more, joining me now is Peter Chia, Senior FX Strategist at UOB. Peter, welcome to the studio.
Thank you, Hongbin, for having me back again.
Thank you so much for joining us. Peter, Trump's new 25% levies on imports from Mexico and Canada, as well as the doubling of duties on Chinese imports, which took effect recently, were met with retaliation from China and Canada. How do, global trade tensions and U.S. President Trump tariffs impact the currency markets, particularly here in Asia?
For sure, since the start of the year, currency volatility is on the rise.
Right.
This is due to a mixture of contrasting factors, like typically tariffs associated with inflation. That has to be dollar positive.
Right.
But recently, we have this renewed concerns about U.S. economy, which is dollar negative. So we are in a tug of war between these two kind of factors. So as a result, currency markets are a little bit more volatile.
Right. So how have Asian currencies reacted so far to those tariffs in light of a broad U.S. dollar decline?
In fact, yes, since late of February, the dollar has declined because of renewed U.S. concerns. But these Asian currencies could not really make use of this dollar decline.
Okay.
So if you look at the year-to-date performance of Asian currencies, the best performer is Sing dollars, which has gained about 2% year-to-date. But the rest of the Asian currencies are all gaining slightly less than that. And in fact, there are some currencies that is on the weaker end, has dropped against the dollar year-to-date.
Right. Let's look further here. According to a recent Reuters poll, it looks like investors are maintaining their short bets on most Asian currencies as they assess the prospects of, the escalating global trade war after Trump's tariffs on major trading partners. Which Asian currencies are investors, holding bearish views or, staying cautious on? And why are they holding such, views on those currencies?
In fact, if you look at the performance year to date, two currencies are clearly lagging behind.
Okay.
The first is the rupiah, and the second would be the Indian rupee. So they are all lagging behind for slightly different reasons.
Okay.
For the rupiah, it's falling back behind because there's expectations of rate cut, and also I think some portfolio outflow from Indonesia. For rupee, it is more of a tariff concern because Mr. Trump has sounded out that there is a big gap between the tariff for that of US and India, and he may address that via the reciprocal tariff, which could be announced in April. So I think investors are generally cautious leading to that date. Leading to a relatively weaker performance for the rupee.
I see. So with growing concerns over Trump's tariffs here, could market players, gradually increase short convictions on Asian currencies, especially given their recent strength, or could the risk-reward for shorting improve?
So I think essentially we stay cautious on Asian currencies for the next 2 quarters because we believe that the tariff action that we've seen so far is just the start. There's still more to come, particularly against perhaps China. So with that in mind, it means that if the renminbi is affected subsequently, it will definitely spill over to the rest of Asia. So that's the reason why we are a little bit more cautious, calling for more weakness in Asian currencies in the next 2 quarters as more and more tariffs are being announced.
I see. Well, taking a deeper dive into some of those currencies here, the same Reuters poll showed that the Thai baht saw an increase in short positions, especially following the Bank of Thailand's interest rate cut here. Does this signal some opportunity in the Thai baht in the longer term, though?
Sure. So, in fact, the interest rate cuts, we have been calling that. I mean, that's not a consensus view, so we have called that right. But we still think that this is a one-off thing. So after this rate cut, they are not going to cut rates further. So what this means is that the pressure on the Thai baht may alleviate somewhat.
Okay.
And let's not forget that Thai baht was the best performing currency back in the first trade war in 2018, 2019. And that was because Thai baht was seen as a safe haven currency. Things could move a bit differently this time around, I think, but I think fundamentals of Thailand is still fairly okay. So I think that could be an opportunity for investors to get back into the Thai baht as we go on. So definitely we are not projecting that much weakness for the Thai baht going forward.
I see. Well, you mentioned earlier in our conversation that the Indian rupee is lagging behind here. And according to that Reuters poll, Indian rupee has also been the most shorted amongst Asian currencies. So what is your view on the Indian rupee's outlook amid foreign portfolio outflows and concerns about tariffs? Could we see further weakness in the Indian rupee?
Yes, in fact, Indian rupee is one of the currencies that we think that there is a potential risk for more tariff against or unilateral tariff against India. So leading to 2nd of April date that Trump is going to announce the tariff. So I think generally there's still room for a weakness in rupee. So currently I think about 86 against the dollar. We're factoring that it potentially can weaken to about 90 against the dollar.
I see. Well, Singaporean dollar or the Singapore dollar was the best regional performer this year. But according to the same poll, it looks like short bets on the Sing dollar were largely unchanged here. What does this signal about how investors are viewing the Sing dollar's performance for the year? Could they continue to be the best regional performer?
Yes, I think this is something that we sounded out back in January where Singapore dollar was weakening. In fact, was relatively weak against the basket of currency. And we saw that was potentially a good area, good timing to start accumulating Sing dollars. And true enough, I think after January, the Sing dollar actually rebounded quite strongly. So I think investors are generally buying to the idea that even with the uncertainty of the trade war, Sing dollars is well positioned as a safe haven currency. So as investors reduce their exposure in other Asian currencies, they could increase exposure in the Sing dollar. That's also underpinning the Sing dollars against a wide basket of currency. And more importantly, going forward, we think that this behavior continue. So that's the reason why we are forecasting like Sing to gain further against the ringgit, to gain further against the RMB going forward.
Right. I mean, that could also be good news for a lot of us here in Singapore looking to travel this year as well. Now, meanwhile, the findings from the recent Reuters poll also showed that the Chinese yuan saw a decline in short bets recently. What do you attribute this shift to, and what is your outlook for the yuan given the trade tensions with the U.S.?
I think everyone was expecting that the U.S. would go very hard on China from day one. The truth remains that I think the U.S. has a lot of more targets other than China. So the trade war right now is a little bit different from the first trade war where it's US v China only. Right now it's US v a lot of people. So the pressure on the RMB is surprisingly a lot lesser this time around. So that's the reason why the short positioning has abated somewhat. But we don't think that the China or the RMB is out of the woods as yet. I think eventually the US will focus back to the China, and if they continue to escalate tariff against China, the RMB will eventually weaken. So we are definitely not complacent leading to this kind of environment. There's a lot of uncertainty, and the growth outlook definitely for China is a little bit more uncertain also. So that really complicates. It's hard to really be very positive RMB at this point in time.
I see. Well, overall then, who could be the biggest winners from this current trade war? Is it the Sing dollar?
I mean, generally in a trade war, there's no winners. If you look at it on an economic standpoint, there's no winner. But on a relative basis, I think, as we discussed a bit earlier, Sing dollars could benefit somewhat. I mean, if we look back into the last trade war, the Sing dollar was very steady against the dollar. So that could happen again. Other currencies, I think, will take direction for the RMB. But of course, with a different kind of beta. So it may move accordingly. But generally, I think Sing dollars could outperform.
I see. What about the biggest losers?
So I think biggest losers will be defined this time around by what countries Trump targets on the 2nd of April. So for now, I think India will be one of those. I think the other countries is a bit hard to guess at this point in time because, I mean, no one knows how to second guess Mr. Trump, right?
Of course.
But of course, there are certain countries that has a little bit more risky. So than that. But generally, we have to watch the movement in the RMB a little bit closer. Because once the RMB goes, typically the rest of the currencies in Asia will start to weaken alongside.
Right. I mean, of course, predicting Trump's next move is always a risky bet here. here. But on that note, how should investors then track and analyze changes in, such short positions by other investors or their cautious notes in foreign exchange markets?
I mean, one way of looking at positioning is like what I usually do is I look for extreme positioning, and typically that will give me indication that the trade is very crowded. So I give you an example like starting of the year, everyone is very long dollar. Everyone was saying, wow, Trump is online, it's going to slap a lot of tariffs is going to cause inflation, the Fed will cut lesser, dollar is strong.
Right.
So everyone was on that right side, on that side of the trade where everyone buy dollars. And 2 months later, the dollar has weakened like 5%. So we look at extreme position and try to find out times where the things is a little bit more too extreme and be a little bit cautious. I mean, we can definitely join the crowd, but at those times periods, we have to be more careful when we join them, especially where the positionings are a little bit extreme. So right now, I think the positioning outside of Asia, I see that I think in the last 1 month, I think people are starting to get very excited about Euro.
Okay.
Yeah, so everyone, because there's this big infrastructure plan, 500 billion that Germany has approved. So I think there's a crowding effect in the Euro of late. Of course, he's also shown in the price where it went out from 105 against the dollar to about 109. But from now, I think it's a bit sideways. So have to be a bit more cautious about positioning. If you want to be long here, I think you need more positive stories to really drive it to the next level. So be a little bit cautious. I mean, overall, over the long term, we are positive Euro. But at this price level, I think it could be subjected to some volatility. It could pull back a little bit before it resumes its uptrend. So this is how I usually use positioning data.
Wow, that's some great insights there. But before we let you go here, Peter, is there anything else you'll be watching out for in the FX markets in the coming weeks? I'm sure the 2nd of April is the big date.
Correct. So with FOMC, that's out of the picture right now. Everyone has to mark their calendar. 2nd of April will be the big day. And I think this is not going to be one day where he'll announce everything. I think it's going to be a sequence. And I think in that week going forward for the next 1 to 2 weeks, it's going to be very volatile. Everyone is bracing up for that.
Right. All right. Well, thank you so much, Peter, for your time and your insights today.
Thank you.
Thank you. That was Peter Chia, Senior FX Strategist at UOB. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.